To build anything that truly lasts, it takes time.
Take the discussion forward about markets, about the global macros, and for that we are now joined by Radhika Rao, the Senior Economist, Executive Director at DBS Bank. Hi Radhika, thank you so much for joining us this morning. A very good morning to you. Now let's start by talking about, of course, the tariffs. Now a 50% reciprocal tariff deal that has been signed with Japan, and a similar deal is in the works with EU as well, as the latest update that we are getting. So what are your first thoughts about this, tariff deals that have taken place yesterday?
Hi, good morning. Certainly, I think since the second, or I would say Liberation Day 2.0, earlier in the month, I think much of the discussion has been on who is going to be first off the gate, so to speak. Trade deals have been signed, I think, quite actively. What didn't happen in the past 2-3 months seems to be gaining speed at this point. To your point, I think countries like in Asia, for example, Indonesia, Philippines, following Vietnam, were some countries that saw the light of day. Japan, of course, was the most recent, something that you mentioned about. For Japan, in fact, it did look like, before August 1st, there might not be a deal because they had domestic elections to keep focus on. But coming out of the elections, you've seen the trade deal actually already being announced. We do think that the terms were more favorable than it was initially, announced, which was that 15% tariff. And most interestingly, the sectoral tariff as well, they're getting some relief, especially on the automobile side. So that's also come down from 25% to 15%. So certainly for Japan, the deal has sweetened. In return, of course, Japan will also be buying much more of US rice, agri, for example, including rice, and also seek to invest about 550 billion worth in some high-tech sectors in the US. Now, with that, Europe, of course, much of the attention next, because Europe is, among the top few trading partners of the US. Right now, it seems to face about a 30% tariff rate come 1st August. So obviously, the national governments are very keen on signing a deal. At the same time, they've also kept ready some retaliatory tariffs, say these discussions break down and they don't really see the light of day. But between yesterday and today, there seems to be a renewed optimism that Europe might also be next off to get the deal before the deadline nears us.
Right, Radhika. Hi, good morning. This is Ankita also joining in. There is, like you mentioned, renewed optimism as far as tariffs are concerned, and the proof of the pudding is really in how the Wall Street is moving. S&P 500, Nasdaq are sitting at record high levels, but the Indian markets are marching to the beat of their own drum. There has been, we've seen a bit of a correction, a bit of a lull coming in on D Street. So clearly, Indian markets are, moving on their own. When do you see that lull to break? Is it because of a wait and watch mode that we have on the trade deals, or because I've already started coming out with the earnings, but there's nothing much, no major action that's really happening in the Indian market?
Hi, good morning. Certainly, I think the US markets, it seems like, at least sentiment-wise, when you look at the sentiment indices, global uncertainty index, and so on, the more progress these trade deals sees, the better the sentiments and financial markets seem to behave. Dollar is down. It went up to about, dollar index went up about 99. It's back at about 97 now. And you've also seen, like you rightly mentioned, the US markets also, especially the tech-heavy indices and at record highs. So India, I think this has been the case for quite a few months now, where domestic catalysts are really very important for how Indian markets are doing. I think the latest set of perhaps two things, the first one being incoming activity indicators have been a bit modest. I mean, you can take anything from passenger vehicle sales to production numbers. There's been a bit of a lull in terms of data points. They've been quite modest. And the other one is, of course, what's happening on the trade deal front. And I think I wouldn't expect the authorities to go ahead and sign a trade deal in a hurry. I think they are looking for a mutually beneficial deal, which means that the terms of trade need to be really clarified and penciled in very at the start, rather than have a tariff rate announced and then you look at the nitty-gritties and it doesn't look very pleasing. So I would think that's why it's taking this long. Some of the news drips seem to suggest that this could go beyond the 1st August timeline, and probably mid-August is when the US authorities will visit India and progress on the trade deal. But I think there is an emphasis on mutually beneficial, so hence it's taking more time. Coming back to the equity markets, yeah, certainly. I think corporate earnings, high frequency data, all of that has been a bit on the softer side. I would say that's why there's a lot more sideways momentum. But I do think when some of these data points turn around and there is clearer signs of a trade deal, that could be the new boost for the local stock markets as well.
That's right. So a lot of domestic catalysts that we should be keeping an eye out for as far as the Indian market is concerned. And of course, the tariff deals and the August 1st deadline is something that we are keeping a sharp eye on for the global as well as Indian markets. Thank you so much, Radhika, for decoding the global macro setup for us. Thank you so much for joining us this morning. On that note, we'll let you go. Great chatting with you. All right. On that note, we'll take a very short break. We'll be right back with more news and updates on the other side.